Alibaba, the Chinese e-commerce behemoth, is at a crossroads. Once a darling of Wall Street, the company has faced significant headwinds in recent times. Remember when everyone thought Alibaba was unstoppable? They were growing like gangbusters, their stock was soaring, and Jack Ma was the rock star of the tech world. Fast forward to today, and the picture looks a lot different. Regulatory crackdowns in China, a slowing economy, and fierce competition have taken their toll. The stock has plummeted from its all-time highs, and investors are left wondering, what happened? Is this a temporary setback or a sign of things to come? The truth is, Alibaba's story is far from over. While the challenges are real, so are the opportunities. The company still holds a dominant position in the world's largest e-commerce market and boasts a vast ecosystem of businesses. But the question remains, is now the time to buy? Let's be clear, Alibaba is facing some serious headwinds. First and foremost, you've got the Chinese government breathing down their necks. Beijing's crackdown on tech giants has sent shockwaves through the industry, and Alibaba has been caught right in the crosshairs. New regulations, antitrust probes, and hefty fines have put a damper on Alibaba's growth prospects. Then there's the economic slowdown in China. Consumer spending is down, and that's bad news for any e-commerce company, let alone one as big as Alibaba. Add to that the rising competition from the likes of JD.com and Pinduoduo, and you've got a recipe for a tough business environment. These are real challenges, folks, and investors would be foolish to ignore them. But remember, every challenge also presents an opportunity. For Alibaba, this could mean streamlining its operations, focusing on profitability over growth at all costs, and innovating to stay ahead of the competition. Despite the challenges, let's not forget what Alibaba brings to the table. This is a company with a massive user base, a sprawling logistics network, and a finger in every pie of the Chinese digital economy. They've got Taobao, Tmall, Alipay, you name it, they've got it. And let's not forget about their cloud computing arm, Alibaba Cloud. It's a major player in the global cloud market, and it's only going to get bigger as more businesses move their operations online. This is a company with a lot of assets, folks, and that counts for something. The potential for Alibaba to bounce back is definitely there. If they can navigate the current regulatory landscape, adapt to the changing economic climate, and fend off their rivals, there's no reason why they can't return to their former glory. So, is Alibaba a buy? That's the million-dollar question, isn't it? The answer, as always, is it depends. Are you a risk-averse investor who prefers slow and steady growth? Then Alibaba might not be for you right now. The stock is volatile, the future is uncertain, and there's no guarantee of a turnaround. But if you're an investor who's willing to stomach some risk for the potential of outsized returns, then Alibaba might be worth a look. The stock is trading at a significant discount compared to its historical highs, and if the company can turn things around, there's a lot of upside potential. Just remember, investing in Alibaba is a long-term game. Don't expect to get rich quick. This is a stock for investors who believe in the long-term growth story of China's digital economy and are willing to ride out the bumps along the way. Here's the thing about Alibaba. They're not just an e-commerce company. They're a technology powerhouse with ambitions that extend far beyond online shopping. Think artificial intelligence, cloud computing, logistics, and more. Alibaba is betting big on the future, and they've got the resources and the talent to pull it off. Now, some might say that's a risky bet, and they're not wrong. But here's the thing about risk. It's often accompanied by reward. If Alibaba can successfully execute on its vision, they have the potential to become one of the most valuable companies in the world. Of course, there's no guarantee of success, but for investors who believe in Alibaba's long-term potential, the current challenges might represent a unique buying opportunity. Let's be clear, investing in Alibaba is not for the faint of heart. This is a company that's facing some real challenges, and the stock is likely to remain volatile for the foreseeable future. But for investors with a long-term perspective, a strong stomach for risk, and a belief in the growth story of China's tech sector, Alibaba might just be a buy. Remember, diversification is key. Don't put all your eggs in one basket, especially when it comes to a stock as volatile as Alibaba, and be prepared to hold on for the long haul. This is not a stock that's going to make you rich overnight, but if you're patient and you believe in the company's long-term prospects, Alibaba could be a rewarding addition to your portfolio. So, is it time to buy Alibaba? As with any investment, the answer depends on your individual circumstances, risk tolerance, and investment goals. There's no denying that Alibaba is facing some significant challenges, and the stock is most likely to remain volatile for the foreseeable future. However, for investors with a long-term perspective and a belief in the growth story of China's digital economy, the current downturn could represent a unique buying opportunity. Alibaba remains a dominant force in e-commerce, cloud computing, and other high-growth sectors. Ultimately, the decision of whether or not to invest in Alibaba is yours. Do your research, weigh the risks and rewards, and make an informed decision that's right for you. Want to stay updated on the latest tech and investment news? Subscribe to our channel for more in-depth analysis. Let me know your thoughts on Alibaba's investment potential in the comments below.